Good morning. It is Friday, April 19th. It is D-Day, the day after Netflix. We'll get to Netflix. We'll get to key levels in SPY. We'll get to seeking alpha analysis. We will get to GCT, which was the alpha pick. We will get to Shopify moving up. We will get to a Motley Fool recommendation of Southeast Asia. We will get to American Express earnings. We will get to the Bitcoin halving and then earnings that are expected for next week. So let's get started. What did we have yesterday? We had a green day in the morning. Everything was good, only to turn to a red day. 2 red candles, morning and afternoon. So this is every day so far this week. April has been one of the worst months for the Dow Jones and the markets in 10 years, I think, is something like that. It has just been a horrible, horrible month. We went over it yesterday, how we broke this support at 429. And I said your next support is this 200-day at 422, 423. Right now in pre-market, you are trading at 423. That is good news because you were down as far as 416, 418 on the Qs. And you've still got this MACD that has shown no support of actually turning around. So the Qs, it's key to look at that one. Now, you look at the 4-hour, and then you go to the weekly. And we're still, here, I'll take out some of this stuff because I don't want to remove this segment. I want to show that candle because this weekly candle right now is a period of negative 4.22. And I've shown this before. This was the July to October turn down. And we saw it almost exactly at the MACD where it started to turn down. And we haven't gotten to the bottom here, which is still pretty elevated for the MACD. It has not turned around quickly. We're just looking at the button hook starting to happen. And we're heading into earnings season. So the question is, does this button hook all of a sudden turn into, hey, okay, we've had enough of a pullback? It hasn't been a huge pullback. Again, if you're looking at the same kind of pullback as October or July to October, we're looking at coming down at the 50-day at 389. And there is support here at 389. Because if we go back to this 4-hour and we look, the next support volume right down here, it's at 410. And then you go back down here. If we pull this back, I think if you pull back to about the October lows, that's where we're going to go. If you go back to the October lows, which are back here, you'll see there's support right here at 411. But then, boom, this is the biggest one, 389. So that's where your support level really lies, is 389. Do we get back down there? I don't think so. Earnings are just too strong to get back there. Now, we'll look at SPY because Trendspider put out some key support levels for SPY last night. SPY on the 4-hour looks even worse. I mean, this one's going down faster than the Qs, and you still have no hope of that MACD turning around. Now, SPY is trading under 500 for the first time for a while. It's up 0.01. The last time it was under 400 looks like it was February. Maybe back into the beginning of February. So we cross that or we pull them back. Well, the 200-day right here is going to provide you a support at 491. We talked about this support level of 480. You've got tons of support levels. When you look at the weekly chart on SPY, same kind of thing. If you pull back here to the January 2022, the high, 479, that's 479, 480. And we're trading at 499. So it's not too far off to get back there, but that is a support level. You look at the MACD, it's just crossing down. So again, embrace yourself for a little bit of a volatile market because the VIX is starting to rise. The VIX is just about 20 right now. But you're going to see with earnings next week something come along. And I don't know what that something is because Netflix definitely threw us a curveball yesterday. But here are the SPY, the downside levels to watch for. 497, that's where February gap filled. 491, that's where the 100-day SMA is. October low, point of contact, 473. 200-day is 465. So again, That's kind of where the levels that you're looking at. We're in a downward trending market. We are clearly in a clear pullback right now. It's going to take a big catalyst to push us up. So what's next for the S&P 500? These are the Seeking Alpha analysts. The S&P has experienced a 4.4% downturn from its all-time high, leading to concerns the bears may be in control. I disagree. I think this pullback is nearing its end and expect the market to rebound in the second half of the year. I completely agree. Mock Capital. In this case, geopolitical tensions are the easy and obvious headline explaining the recent stock pullback, but that's not really what's happening when digging deeper because the rates, the dollar, the yen, and oil do not reflect the typical flight to safety ones would expect. Again, bull market. JR Research, I view it as steeper pullback as a golden opportunity to reload exposure. That is very key. As you start to see this pullback, you better be loading up on stocks you like. Because if it's stocks you like and if it's a good company with good products, with good management and good earnings, it will go up in the bull market. Demir Takik, the S&P is facing a recessionary bear market and in near term a deeper correction due to a higher interest rates and a contraction in the PE multiple. That's true as well. I mean, you can listen to those downside guys who are saying, hey, it's deeper. But I point out to you that if you bought here in May of 2022 at 420 because you like the cannabis, you like the wacky weed, you bought at 420 on SPY, and then you proceeded down to October 2022 to 356. You were upset. You were upset because you lost money. But in the long term, again, your time horizon matters. So if you're looking at an opportunity to get your portfolio straight, to get money in your portfolio, that's an opportunity to buy. Don't try and time the market. Continue to add to stuff. And that's the key. It's a golden opportunity to reload. KM Capital. The market may appear slightly overvalued based on PE, but comparing current ratios to historical averages, it's likely unfair due to the potential long-term economic value from the AI revolution. Again, an AI market. So James Ford, who I did an interview with, war tensions between Iran and Israel prompt sell-off, but in my view, present a big dip buying opportunity for stocks. I completely agree. So there's your Seeking Alpha analysts. And then what happened overnight? We dipped, crazy large dips that have since come back because Israel's strike on Iran. It's basically being said, hey, it is a measured response per se. I don't know in war that you can have a measured response, but it's a measured response. They're still checking damages. There wasn't huge casualties, blah, blah, blah. It's war. It sucks. It is what it is. But yeah, you've got this, the stock futures were down. They've come back. So I don't know what happens, but, we've talked about it all week. We've had red or green days turn into red days. And during the market, do we see when the market opens up? It's 8:57 right now. I don't know what happens. I just don't know what happens. I'm not looking to load up right now. It's a Friday. We talk about Fridays all the time. You don't want to load up. If you are in triple levered ETFs, I would suggest getting out of them before the weekend, specifically because Israel launched that attack. We don't know what's going to happen over the weekend. If you have trades, I would suggest, evaluating them on a Friday, making sure that you realize that, hey, on Monday when I wake up, this could be down 10%. It also could be up 10%, but it could be down. So make sure your stories are in line with your portfolio. My portfolio is getting killed. Apple is at 166. My portfolio is getting absolutely demolished right now. I am nowhere near. I am absolutely negative for the year. But I'm okay with it because I think that Apple continues to be a strong company. I do think they have AI. If you haven't used Siri recently, try it. It is 100% better than it has been, which tells me they're introducing AI into their processes, and most likely they're going to say something at WWDC in June that they're further along in AI on the iPhone than we previously thought. Taiwan Semi said yes, mobile phones are slow, but they're rebounding. That could mean iPhones later in this year get a tick up. But yeah, so I don't know. Do we turn a red day into a green day? That would be a nice thing. Might happen on a Friday. I still wouldn't necessarily trade a lot today. Bitcoin's up. We'll talk about the Bitcoin halving. Now, Netflix. Let's get to the dirty little secret here. Netflix on my bingo card was not. Hey, we're gonna stop giving you guidance on financial forecasts and beating and subscribers. They basically said they're not. Starting in January, they're gonna not give a subscriber guidance. That to me tells me that they're worried about ARPU. And I've read a bunch of articles, and I think it corroborates this. Average revenue per unit. They are worried about the ad tier kind of not performing as well, and the subscriptions falling off to the ad tier. Blah blah blah. It could mean that they're just slowing their growth. That will mean that Netflix's multiple gets dinged. And we can take a look at Netflix in Seeking Alpha right now. I've got an article for you if you want to read more about it. It's a hold. The valuation is D. We talked about this. The PE is huge. The PE is 50, sector median 12. The forward PE is 35, sector median 12. The PEG for growth is a B minus. It's 1.18 versus 1.32, the sector median. So you're 10% below the sector. But if their growth is slowing, that's where it's going to get killed. So that's where it will be brought down. And Netflix, it was just all over the place. I wrote a note at first because it dipped down below 600. I said, hey, you've got an opportunity to buy this under 600. I don't know that you necessarily want to buy this one now. If you bought it before earnings, hoping for the big pop, or you listened to a douche on the internet, why you would do that, I don't know. But if you bought it before earnings and hoping for that pop, I still think you've got this 700 in the bag here. I do think that at some point in time, this gets to 700. It's not a bad investment. This isn't one that you want to trade. I think you want to continue to add to this, and I think you take the opportunity. It's the one streamer that's making money. The problem is their costs are going up, and their revenues probably they're going to have to expand in foreign markets, not necessarily the U.S. market. And so that's the ding that is going to happen. We're still in an upward trend. We're kind of getting that little thing. You could look at it from this standpoint in July of 2023 when you were trading at 432, and then you dip down to 365. That may be what's happening, but overall, you're still in this upward trend, and I think you continue in this upward trend. The earnings were amazing. Okay, let's go take a look at Earnings Hub. Earnings Hub is one of my favorite ones, by the way. They just started it. The guys at Savvy Trader just started it. And it shows you everything that you wanted. So here, earnings per share expected 452, reported 5.28. That's 16.81% above. Expected revenue 9.828 billion, reported 9.37 billion. That's 0.97 above. So what happens? Well, let's take a look at the AI summary of this. The positive, Netflix is evolving its revenue model with additional of advertising and extra member features, which diversifies its income streams. Fantastic. Remember, they're gaming. They've got WWE. They've got a ton. Netflix advertising tier has been scaling rapidly with a 65% quarter-to-quarter growth, indicating a strong potential for future revenue growth. Sure, great. Here's the negative. Next, Netflix will stop reporting quarterly membership and ARM data, average revenue measurement, in 2025. Average revenue per member, I think, which may reduce transparency for analysts and investors. They don't like that. The market hates that. Look at how Apple, when they stopped reporting iPhone sales, it was supposedly the end of Apple. It surged. They have to change the narrative, and that sometimes causes pullbacks. Revenue growth is expected to decelerate for the full year from 15 to 16% in the first half to 13 to 15% for the full year due to tougher comparisons in the second half. Yeah, because the second half was during this 2022. Here you go. The second half, look at that. Their comparables, they're going to have to compare against the stock growth, against the revenue growth, against everything. They started to turn around in June and July. So it's going to be hard for them to turn that over. There's an acknowledgement that the process of transitioning to paid sharing will impact overall absolute view hours, indicating a potential short-term engagement dip. Sure. I mean, this is essentially the report, and this is why I like this earnings hub. Now, I'm not a member of this. There's no affiliation. There's no, charge for this. It is completely free right now with certain segments being charged. But I really like this website. It puts it nice and easily. I think they're going to do the same thing that they did with Savvy Trader, which they'll turn portions of this into a paid thing. It costs a fortune for them to run this kind of stuff. But I do like the layout. I love this earnings segment right here, how you can get the AI summary of this. I think they've done a really, really good job. And I think Netflix in particular, this puts it into perspective. So one stock that I want to point out that I got right, and I did put a lot of money into this, we're talking mid 5 figures, is GCT. It's at 37. I think I bought this around 32, 31, somewhere in that neighborhood. It was probably around 32. Let's see. Monday was, it was the 15th. Yeah, the 15th. So we were trading. Yeah, I think I got this around 32. The low here was 31.10. I think I got it at 32. Yeah, GCT. It's up at 37 right now. This is the most recent alpha pick. If you're interested in it, you can go and look at, let's pull it up here. GCT in Seeking Alpha, strong buy, number 1 out of 5, consumer discretionary in the distributors. It's a GigaCloud technology. Here you can read Steve Kress's analysis of it, even if you're not a member of Alpha Picks. So remember, there's 2 things that I'm an affiliate here for. There's first is Alpha Picks, which is basically 2 data-driven stocks every month, and it's buy and hold. This is not a trading strategy. It's Alpha Picks. It's not daily. It's on the 1st of the month. It's on the 15th of the month, and they give you 2 picks per month. They alert you when to sell. It doesn't matter if it's the 5th of the month. Doesn't matter if it's the 1st of the month. Doesn't matter if it's the 2nd of the month. But they give you when to sell. It covers multiple sectors, access to every pick on day 1. You basically get what you go over here. And if I just choose Alpha Picks, you'll get all of these analysis, all of them. It's in depth of the entire portfolio, and you get access to the entire portfolio, the current and the whole holdings. You'll get access to the performance, how each one performed. And then you can read all about how they do this, how they pick it, blah, blah, blah. But you'll get access to all of that. Now, if that's not your thing and you want access to more than just the Alpha Picks, then you sign up for Seeking Alpha Premium. And Seeking Alpha Premium, you get 20% off. It's $189 for a year. What I like about this is I get to go to Seeking Alpha and I got to go home, and then I can put any stock that I want to in here. And as long as it's covered by the quant, we can go look at Apple. Apple's one of those. It's a hold in the quant because of the valuation, F. And you can do your own research. So there's 2 things. Alpha Pick gets you just those picks and just that analysis. Seeking Alpha Premium, which I think is a better value at $189, allows you to do your own research. But I understand there are different levels of people and different comfort levels. But if you want something where it's just handed to you and you're a beginner and you want to see how a stock is evaluated, get Alpha Picks. If you're fairly seasoned and you read things on FinViz and you want something without commercials, without ads, without just a place to go with significantly better analysis, then Seeking Alpha is your thing, and it's only $189. And you get to import your portfolio. Like this is the Daily Stock Pick Core portfolio. It gives me a rating of 3.69. There are some that are, holdings here. You can go to holdings and look at everything. You can look at after hours. You can look at ratings. You can put all of this stuff in. This is a great benefit to all of these things. Look, change type, downgrade, downgrade, downgrade. I mean, I can look at all of these and say, okay, do I really want this? Palantir, upgrade. It's a strong buy. You can view all the headlines if you want. You can add a view. You can do whatever you want. One of the other things that I really like are these comparisons. Stock and fund, you can find 5G stocks. Just go to 5G stocks and it'll list Verizon, AT&T, T-Mobile, Qualcomm, Broadcom. And you can customize this. You can create your own. If you just go to comparison, you can create your own comparison. Say you want to do Apple, Microsoft, Google, and Meta, and you want to compare those two, and you wanted to click a button, create your own. Create your own, and it gives you all of that stuff. So those are the two things with Seeking Alpha that I do, but I did want to point out GCT is the most recent alpha pick. I've pounded the table. I've said it enough. That's enough. I think it's a long-term buy and hold. So are you upset that you didn't get it at 32 when it's at 37? You still have confirmation. It is one of the few stocks that's showing you confirmation. It is well above the MACD. Your RSI, a little bit oversold, overbought. 62, not horrible, but it's a long-term one. So their earnings are coming up on, it looks like May 21st. So you got plenty of time between now and earnings. Speaking of ones that will come back, Shopify. Shopify's moving. Morgan Stanley says valuation is reasonable again. Morgan Stanley hiked its price target to $85. I say it's an $80 stock. Shopify is up 3% today. Did you get it in the 60s? Because it's an $80 stock and it's trading right now at $71.85. The algorithm got you in at $69.56 in yesterday afternoon's candle. So MACD cross up. Be patient and add more when the algo gets you back in. It is now. I'm waving that green flag. NASCAR. You're coming around turn 4 and you're coming up. The green flag is on. Add more. This stock has earnings coming up here on May 7th. Morgan Stanley says it's undervalued. Read this article. Understand it. Understand why you're buying it. It's a great company. Valuation is expensive. Again, if we go over to Seeking Alpha Premium and we look at this, it's got a D in valuation. 4 stocks to watch on Friday, PG, AXP, and more. Shopify is one of them. I do believe in this stock. I do hold a bunch of this stock. I think my average purchase price is like 73 or something. I've gone over it several times. I'm not going to look at it again. Shop gained more than 3%. Morgan Stanley called Shopify's valuation more than reasonable on a normalized free cash flow basis. Shopify in February reported a quarterly beat on gross merchandise volume and forecasted current quarter revenue growth at low 20% on year-over-year basis. They'll be fine. Shopify's a good one. Now, my dad has a subscription to Motley Fool. I am not a big Motley Fool fan. I have the ability to be an affiliate of Motley Fool. I chose Seeking Alpha. I think they're just better. I chose Alpha Picks. Because Motley Fool, I've had years. I think it's been 15 years my dad has been a member of Motley Fool. Hey, it's worked out for him tremendously well. Absolutely well. I just think they're a little extended. Their current offering is Grab, with its Southeast Asia's Uber. Grab owns the mobility and delivery markets in Southeast Asia, whether because of inept competition or complex geographies. That gives it powerful position in this economy. The founder-led management team has good management, strong culture with compelling mission. The stock has been written off as a SPAC failure, offering a compelling entry point. Understand, this is a SPAC. I am not a big fan of SPACs, but it's a SPAC. It's a foreign company. So they're going to report on different time frames, everything of that sort. I just don't get it. Again, Grab is one of those. If we go over to Seeking Alpha and we look at Grab, GRAB, and we look at this, I think it's a hold, if I'm not mistaken. It's a buy, and Wall Street says it's a strong buy. Wall Street analysts have it as a $4.65 target. That's 37% upside. Now, look, that has been $4.35 while it's traded well below that for the foreseeable. Yesterday, it was up 5.61%. That's probably the Motley Fool bump. Motley Fool has a tremendous following that just buys what they say. When it comes out on their paid platform, you can see it. When they release it at 1 o'clock, you see a bump. It's like 5-6%. So this one just held the 5. It's up another 1.18. You can buy this one if you want. It's ranked number 3 out of passenger ground transportation. You see what's number 4? Uber. I'd rather see you in Uber. Lyft even has probably bigger opportunities. Grab, I didn't like it too much. It's a Motley Fool recommendation. I'll include some of the screenshots in there. I thought it was important enough to bring up. Now we talk about the consumer. American Express slipped in Friday, trading after volume of payments over the credit card company's network during Q1 missed consensus. Q1 earnings beat as interest income rose and expenses and provisions for credit card loss declined, blah, blah, blah. We can go over to Earnings Hub and we can look at the AXP because I do like looking at this stuff. This is one of my favorite platforms to look at this stuff because they just summarize it very well. And again, it's not paid. But look, compared to the Netflix, expected 264, reported 262, expected 16 billion, 15.8 billion. So if you look at the full summary of this and we look, record revenues, American Express delivered record revenues of 61 billion for the year, up 15% in a free cash flow basis. Negative forward-looking statements. The discussion included forward-looking statements that are subject to risks and uncertainties. Softening growth rates, small business spend, reserve build. Again, it wasn't a lot to talk about that's really good. If we go and we look at AXP over here, we can see in the quant, I think it's a hold. Yeah, it's based on valuation. It's all based on valuation. The PEG ratio, they're trading at 1.28 versus their growth. It's 5% above what the sector is. When you look at the 10 out of 37 in the consumer finance, what's number one? Synchrony. You can look at Capital One Financial, which, by the way, got a cross up. If we go and look at the AXP chart here in Trendspider, this one, it's had a crazy good gain. Ironically, it gets you in at 219. You're trading at 217. The MACD is well low. This is pulled back. So if you can deal with those forward-looking statements and the risk, I think you'll do well in this one. If you look at the weekly, we've pulled back a little bit. I said it before. This was the trading range that I saw it trading in. This has been since 2022. We broke out above it. Does it get another leg higher? I don't know. I mean, look at when it hit all-time highs here. It pulled back. That's a fairly big pullback if you look at this. That would be, but this was 2022, so it was a big pullback in the consumer. That's a 30% pullback right there. You can see where it hit all-time highs before COVID, and then it pulled back. But I think you continue down this one. I think I'd like you to see it around 210. If it's going to pull back to 210, maybe put in an order for 210. But I think long-term, I think it's American Express. I think it's got the high-end consumer. I think you'll be fine. Now, Bitcoin halving is happening this weekend, I believe. What I wanted to point out, there was a quote in here that Bitcoin halving, it basically says that the history of it's bullish, but I can't find the quote real quick. I wanted to say the quote. If history serves as a guide, the halving has preceded big price gains. The event could boost the price of Bitcoin to more than 115,000, crypto tax reporting firm CoinLedger said in a study last month. Since there has been three halvings so far, it should be taken with a grain of salt that Bitcoin tends to rise after the event. There's only been 3 of them. So Seeking Alpha analyst Florian Grums had warned that Bitcoin typically weakens for about 15 to 45 days immediately before and after the halving. Bitcoin had already reached. I say this all the time. Yeah, Bitcoin halving is tomorrow, Chris confirms. But I say this again. If you're younger, have exposure to Bitcoin, get one of those Bitcoin ETFs, BIBIT. If you're in Trendspider, you can find them. I have a full list. If you don't have this list and you're in Trendspider, it's the Bitcoin and crypto ETFs. Find one of those with a low expense rate, and you can go over here to Seeking Alpha and just type in IBIT. And you can find, you can go to its peers, and you can see there's peers. FBTC is one, ARKB, BITB. Find one with a low expense rate. FBTC right now has a 0% expense rate. BITB, 0%. BITO, I think BITO has a, BITO, let's see. I think it has a 0% as well. BI 2.95 now, but find one with a low expense rate. You don't want GBTC with 1.5% expense rate. Even though over 1 year GBTC performs the best. Remember this: the reason it performs the best is because it was so far behind. So I do think that there's an opportunity here to make sure that you have exposure as a younger person. And Chris had a great idea, by the way. If you're a younger person, say you have $500 that you want to put into Bitcoin, I would say take 250 of that and buy Bitcoin just outright, but open up a Roth account and just buy BITO or IBIT, one of the ETFs in a Roth IRA, and just let it sit there. Don't look at it. Just let it sit there. And $250. You do want a good Roth portfolio, but I do think you want something that provides you the opportunity for game-changing money. And if you put it in a Roth, remember, you can't get that out until you're 59 and a half, but you'll have at least 50% of whatever you want to put in there in your retirement account, and you'll have 50% in Bitcoin yourself. So if it is life-changing, you can get the money out of Bitcoin because you've already put half of it into that one. So the Bitcoin halving, big event. So understand it. Now there's earnings next week. We've got Monday. We've got Cleveland Cliffs. This is, by the way, the core portfolio. These are the earnings next week, Cleveland Cliffs. What are we going into it looking at? You're seeing this range and I'll go to the weekly so you can see the range. But algorithm has you out. Got you out with a 4.53% gain, but it has you out. We're seeing weakness. Could this one jump up? Probably. I mean, they look at their past two earnings have been really good. Really good. Even this third earning back here, really good. Your MACD is below the oscillator. Every time it's below the oscillator, we've seen it. I think you're trading in the range. If we go to the weekly and we look at that range, you're seeing you're just below this range. So could it break out to above 23 again? Possibly. I mean, again, I think at some point you'll get above there to 25. I think some point again, you'll get above to 25. Pepsi is reporting on Tuesday. Pepsi has been, come down a little bit. Pepsi is reporting Tuesday, 170.10 yesterday. Yeah, yesterday morning, $170. It's at 172. You're going into it with strength. You're going into it with a golden cross up. You're going into it with the MACD on the oscillator. You're going into it with the RSI at 63. It's an interesting one. One of the biggest earnings that will be watched is Tesla. I heard, and this is on Tuesday, I heard yesterday a great thing. And this is kind of turning me around to Tesla. It's still not turning me around based on the valuation, but it's turning me around. So with the two top key executives leaving, Elon Musk has now flattened his organization. He has said it's wartime with Tesla. He is back in charge of this company. And there are still enormous challenges for this company. But he's got 35 executives reporting to him now. If you don't think that Elon is fully invested in this, where he doesn't announce that he's putting more people between him and the people that have left, he's absorbed people. He's got 35 executives reporting to him. Elon Musk has more often than not made things work. The August robotaxi, I think what he's doing, and I don't know this, but it was a rumor, and there's some suggestive rumors about it, is that they are starting to they've turned the Model 2 into making the robotaxi, so that what happens in August, if they're trying to get the hardware and the software in the same at the same time, I think that expands and quickens the pace of a robotaxi coming. So I do think that this is an interesting time. I think it's an interesting bet, but I would go back to the valuation of this. And again, this is never traded on valuation, but if you go to Tesla and you go to their summary here in Seeking Alpha, we can see it's a pure hold, and it's based on valuation. The momentum sucks, but look at the PE and even the gap. I mean, even the PEG, the PEG 3.93. So I'm not all bought in, but I am loosening my hate for Tesla. I still think that from a weekly perspective, I think if they announce this time that they're seeing a reduction in margins, I think you see that 100 in range. And for the person that commented on YouTube that it's not going back to 100, I think you're a fool. I think you don't understand that yes, it can go back to 100 because it was at 100 before. And it was at 100 based on worries about the margin. Now, it crept up here because they started to keep their inventory levels increasing. What has come down to it? Well, in December and in January, you had reductions in the amount of cars that they were delivering. Then you had that mess of a conference call where Elon said, yeah, we're not providing guidance, kind of cocky. And then you have the deliveries in March, which were 360,000 against an expected 420,000, which is comparable to the year before of 440,000. I mean, come on. You've got a declining company here that is valued as a growth company. And until they change that, that's the problem. So Tesla, it's going to be watched really carefully. The other really careful one that's going to be watched is Boeing. We saw the whistleblower testify that he thinks planes could absolutely fall out of the sky with the way they produce this stuff. I mean, we blew right through this 176 support level. We're looking at 169 for the buy-in right here today. It's interesting. Boeing, it's not going anywhere, but with the scrutiny and the additional stuff, the CEO changes, blah, 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 you got some problems. So this may come out of the core portfolio, but I do see the upside on this one because they still, it's one of two companies that makes airplanes. Meta on Wednesday, along with Boeing. Meta has you out of the algorithm right here, has an opportunity. The RSI is at 46. They talked about their deal with Google yesterday. I think it's enormous. I think heading into the earnings, I think it's going to be crazy that you don't own this one. I say buy it under 500. It's at 504 right now. The only thing is the valuation. The valuation is the only reason pulling this down. But like Steve says, it's the growth, the PEG, 113 versus sector median of a 132. It's 12 out of 59 in the interactive media space. Number one is Google. So I own both. I own both. You really want to own both. Now, another one is Microsoft. Microsoft is coming up on Thursday. This one, it's at 400. I think if they say anything about their AI revenue, I think the street's going to eat that crap up. And I think you're going to see this one buy up to 440 again. I think you're going to see it pop, to 5 or 6%. It's going to go up. Now, Microsoft, it is expensive. Understand that run that we've had in the past 2 years in Microsoft has made this company incredibly expensive. It is a hold in the quant, the valuation. You look at the PEG, and they're trading well above. So, which one do you want to own? I think this one's going to blow it out of the water. The problem is the EU is looking at their deal with OpenAI, but come on. This is one of the AI leaders. So Microsoft is coming up. Podcast favorite, SMCI, which is down 5% today to 878. SMCI is coming out with earnings on Thursday. Do I think you should buy this one? Algorithm got you in at 992. Hasn't gotten you out. You're still in. Probably will get you out today, though, with a loss. You're at 878. Do I think you should get in? I'm holding. I'm not selling. I'm holding. If we pop to 1100, I'm probably thinking about selling at that point because I see what this stock can do, and the street just doesn't like it this high. If we go over to the quant and we look at SMCI, it's still a strong buy. And you look at the valuation. The valuation is not crazy. Yes, the PE is forward and reverse, trailing 12 months. Both of them are high. Yes, all of the sales stuff. But look at the PEG. This is the price to growth. And as long as they're still growing, this is one that you still want to own. And we talked about Google, number one over there in that interactive media space. Well, they report on Thursday. So you can see Google, it's shown some strength into this earnings. You're at all-time highs around this point. You've got a gap down here between 147 and 142. I think Google, with their current stance with their employees, I think it's a transformative position. They're saying to their employees, "Hey, we don't mind that you protest. Don't disrupt business. We don't mind that you say things that you don't like. Don't disrupt business." And they're standing up to their business, their associates, and the people who actually work for them. And management is saying, "Hey, we're going to run the company and we're going to run it. And it very well may have some layoffs soon and they may run leaner. So I like this company. I like this stock going forward. I think at 157, I don't think that you wait to buy it till it dips to 150 because you've got the earnings coming up. If you don't have it, get it. Finally, core portfolio stock to report on Friday is XOM. This is Exxon. We've had record high gas prices towards $90. The stock has pulled back, got you out with a 13% gain. That is huge. February and March or April, 13% gain. Where's the RSI? It's down here below 50. What are they going to announce? They're going to announce a ton of money, that they made a ton of money. They're going to give some back to shareholders. They might announce the PXD, completion or whatever, the purchase of PXD, Pioneer Natural Resources. It's trading right in line with Exxon. So they're reporting, looks like May 2nd. So Exxon, I think it's a good bet. Shep, social requests. Shopify and Crowd are two losers in my retirement account. Hold or take the losses and find greener pastures. Shop. I mean, you're seeing it rebound. It's come back down from its, the market is turning a little bit more negative. The Qs are down 0.38. They were positive. We opened up and it's now down. It's up 1%. I think it's an $80 stock. It's up to you. If you want to sell this one, go ahead and sell it. I think it's got a good forward path, and I think their earnings will tell you a good story. Now, CrowdStrike, I mean, you're at the 200-day. Do you want to sell it? Is cybersecurity that bad right now that you want to sell it? If we go to the weekly and we look at it, it's just pulling back a little bit. It's just pulling back to its 21-day. Yeah, your golden cross here. It just made a monster move. It's just, this is just a setup for the earnings on May 27th. Now, the MACD is super high and the RSI is coming down. If you want to sell it and move to greener pastures, that's you. I continue to say this. I have made my money with buy and hold. I have not made my money trading in and out of stocks. I have made my money with buy and hold long term. If you want to find greener pastures, you're a different investor than me. That's perfectly fine. I'm not going to say that you're wrong because very well you may have done it right. But I have many friends who had told me I'm getting out of Apple and they didn't get back in. I should have gotten back in. I should have gotten back into Meta. I should have gotten back into Netflix. I should have gotten back into Google. I should have gotten back in. Shep, if you can live with yourself and you can deal with that, yeah. I personally think you're going to say, I should have gotten back in. And I don't want to be in that position, so I buy and hold. I am not the best protector of capital, though. Perfect, full disclosure, I lose 20, 30% at a time on some of these. I'm not the best protector of capital. Highlighted comment, Abdullah asked if Blackstone is a good buy. I don't know much about Blackstone, but I do know... let's see, it's BX. They had their earnings yesterday, and I think they reported a pretty good quarter. I don't think it was horrible. But let's take a look at it in the 4-hour algorithm. Looks like it's not a buy right now. You just had your earnings going down with the market. MACD's kind of going down. RSI at 35. You could if you wanted it long term, you could probably buy it. Their ex-dividend date is coming up. Let's look at Blackstone here. BX is the symbol. It's BX. Blackstone. There we go. Blackstone, it's a hold. I don't think there's anything crazy about getting into it. The valuation's a little bit much. You can see it's been a hold all the way for quite a while. If we look at the valuation here, it's an F from the PE, F from the D from the forward PE. The PEG, it's trading well below it, so it's not horrible. It's rated 63 out of 92. Blue Owl Capital has been up there as a favorite of the quant. And we'll probably see the stock chart. Yeah, the stock chart shows why it's a favorite. But it doesn't excite me. Is Blackstone a good buy? Is it a good buy? I don't know. It doesn't excite me. Nick, INCY, Insight, INCY. I don't know what they do, but Insight Corporation. Let's see. Hoofa. That's not a stock I want to trade right now without knowing more about it. That chart looks ugly. Let's see. INCY. Let's see what they do. It's a buy in the quant. Biopharmaceutical. Buy it at your own risk. It's biopharma. I don't like that stock chart. I don't like that stock chart over 1 year. I don't like that stock chart over 5 years. I don't like that stock chart over 10 years. I just don't like the chart. And it's biopharma. But if you want to listen to, some analysts, read about it. A potential GARP superstar. That's from February 27th. Let's see where it's traded since February 27th. Since February 27th, he says it's a superstar. Let's see. February 27th, we were at about 57, 58. Doesn't look like a superstar to me. 15%. So, again, Nick, doesn't get me excited. Again, it's biopharma. So, Mara is from Instagram. Hi, Gary. You'll talk about it tomorrow, I'm sure. But does the dip in Netflix, despite earnings per share beat and solid subscriber growth, signal a change in the overall market sentiment to you going forward? Should we expect negative reactions to earnings reports that are anything less than mind-blowingly good? Netflix didn't go down because of their report. They went down because of the guidance. And so the guidance said, hey, we might see a dip in revenue. We might see higher costs. We might see this. We might see that. And we're not going to tell you a key metric that you've guided us on, that you've priced us on before. That's the reason why it went down. So Morris, I don't think it had anything to do with the earnings. I do think that you're seeing a gap, and I think it presents a buying opportunity. That's my thought on Netflix. I'm sticking with the 3-day rule. I'm not buying it right now, but probably after 3 days, and when I see the action, I probably will. Scans, we talked about Shopify has a buy in the algorithm, the 4-hour algorithm on Trendspider, 69.56. It's trading at 71. I said, Morgan Stanley, or I think it's Morgan listed, said $85 price target. I think it's a good one. Boeing had a cross up. We talked about Goldman Sachs. There's other ones that I will put in the newsletter. One that I wanted to point out is Sunoco Energy. This is a strong buy in the Seeking Alpha Quant. We can go over this, but it's got a buy here at 54.66. Their earnings are coming up on May 7th. This is a strong buy in the Quant. Oil prices have gone up. And if we go over here and we look at SUN, I think this one might be a good energy trade. It's the number one energy, oil and refining gas marketing. So again, Sunoco, strong buy in the quant. If we look at Wall Street, they're 14% below their price target. Look, this thing doesn't trade very often below its price target. But there's some issues under the if you want to read about the issues, you can read about some of the analysis, like this Sunoco, big deal coming in 2024. Mr. Market says, so what? Friday, April 12th. That was just recently. You can read about that one. You can read about the buys. This is why I like Seeking Alpha Premium. You can read all about that stuff. There's a cross up in an spider sector, XLP. XLP is the consumer staples. And I want to point this out because the consumer is still very strong. And so consumer staples might be a good one for you to look at. And what do you do with something like this? Say you don't want to buy the XLP because it doesn't excite you. On the weekly, you're still kind of up there. It's still kind of choppy to you and you don't want to do it, but it got a cross up. Let's go over here to Seeking Alpha and we'll put in XLP and we'll look at this one. It's a hold in the quant. Oh, I don't want XLM. I want XLP. And we'll look at this one. So we go over here and we look and we say, yeah, it's a hold. It's not great for me. Sector equity, it's 4 out of 11 as far as the quant goes. Consumers, the PBJ is the number one, but you really want to look at XLP. And you want to say, okay, Gary said it's got a cross up on it. What are its holdings? Procter & Gamble, which reported today, 14%. Costco, which I own at 730, which is trading well below that, 12%. Walmart is 10%. Coca-Cola, which is up today, 9%. Pepsi, which has earnings next week and has been down 4%. Philip Morris. I'm not a big Philip Morris fan. That tobacco, not a fan of it at all. Target, which I actually own and I think has a bigger upside potential. So maybe you want to just take something like a Costco, Walmart, or a Target, and say instead of XLP, if it's going to have an upward trajectory and the consumer is going to have a bullish run on this one, maybe you want to look at that. Cardinal Health, we talked about, that had a cross up. Delta Airlines, we talked about that one yesterday. Delta Airlines had a cross up. AbbVie, Duke Energy, Southern, COF, Capital One Financial. So all of that stuff. Remember, Trendspider has a sale going on. It is $639 for the year. Invest your tax refund, $639 per year. If you can't make $53.32 using my algorithm in the charts, this isn't for you. You're not trading with a large enough portfolio. You probably just don't have the exposure to it. If you want to try it, do the $149 for a month. Again, you're saving 25% using my link. Plus, what I give you is my 4-hour algorithm, my 65-minute algorithm. I give you all of those things so that you can import them easily into Trendspider. So what you do is you go to my link tree, any of these specials, they're all in the link tree, and you can use those links to save you money. The links save you money. Again, we talked about even Visible, my mobile phone service. These are two plans. I have the low plan, $25. My link saves you $20. And $25 gets you pretty much unlimited everything. Now, $45, say you've got an Apple Watch and you want to, get your Apple Watch on there. Well, most services charge you $10 extra. Smartwatch, for $45, you get unlimited phone service and smartwatch service. Unlimited use of your phone as Wi-Fi. One global pass per day, $10 savings. So I really, really like this service, and I'm a fan of it. This is what I currently use. If you want to buy stocks on Webull, I have a Webull account. I still haven't bought anything on there. I'm sitting and waiting. It's a Friday. I probably won't buy anything in there. You can follow my trades on Savvy Trader. Anything that you want is here. So if you have any questions, hit me up. I will talk to you guys Monday. See you, bye.
The trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.